Hey guys, Jeff with optionboxer.com. Got another strategy video for you today, and before we get into it, please know that I am not a registered financial advisor, and this video is not a recommendation for you to buy or sell any security or attempt any strategy. Just make sure you understand the risks of trading and the risks specifically to whatever vehicle you are trading, whether that be options, futures, forex, stocks, you name it. In any case, I'm not a registered financial advisor, and again, this video is not a recommendation for you to attempt any strategy or buy or sell any security. All right, so I'm going to go through this little slideshow I've created here really quickly, and then we'll look at Thinkorswim and kind of identify some real-time examples. All right, so first we're going to create a watch list of stocks that we know are liquid. I trade options, so I like to make sure my stocks are have a liquid options market. You don't have to create a watch list. You can scan and you can look for these setups elsewhere, but I like to do it on just a handful of stocks. That way I can kind of keep a close eye on them all the time. If you have 500 stocks you're looking at some point you're not going to be able to look at all 500 in a day. In any case, you're going to look for a period of below average volume, hopefully 3 or more days, and then avoid earnings, as those days are typically heavy volume. We're going to look for above average volume as our trigger, and then we're going to add those stocks to a watch list, or like I mentioned in the first slide, use our preferred list. All right, step 3, we're going to identify our trading strategy, meaning if we're trading options, are we going to do vertical spreads, or are we going to do credit, or are we going to do calendar spreads, back ratio spreads, whatever it is we're going to trade, we need to identify that. Typically in a low IV rank environment, we want to be net buyers. In a high IV rank environment, we want to typically be net sellers. These are just general rules of thumb. They're certainly not set in stone. And then in a neutral IV rank environment, if we can't make up our mind between being a net buyer or a net seller, we could just trade the shares of stock. And then so here's kind of our rules to enter a trade. We're going to enter a good till canceled order once we see our trigger below or above the current market price, based on what direction the price move is. And then it's going to be, we want a bearish candle to match a bearish volume bar, which means if we have a red bearish price day, we want a red bearish volume bar, and then the same in the other direction. If it's a bullish candle, we want it to match a bullish volume bar. The idea is that when volume spiked, more people took notice of the company or entered on the day that the volume spiked, and then these traders or investors would want to take some profit off the table or possibly cut some losses, hopefully causing the share price to retrace a small portion of the current move before continuing onward. All right, so enter a good till cancel order, one cancels other order. Sorry, it's kind of a tongue twister there. And then we're going to enter a stop limit order for our profit target and stop loss. That's all kind of one thing right there. It's a good till canceled, one cancels other order. And one of those orders is going to be a stop limit for the profit target, and one of those orders is going to be a stop limit for the stop loss. Sorry, that was a handful. And then let's go ahead and take a look at a couple of current examples from my preferred list. So I've already got Microsoft pulled up here because that's, I can run you through here really quickly. We're looking for a period of this line right here where my cursor is. It kind of shows you the average volume. As you can see, this is the volume average indicator, and you would simply go to your indicators, type in volume average, and add it to your chart. And so we're looking for the current day, which today is 7:30, or Friday was 7:31. You can see here in the date box that tomorrow will be 8-3, but we're using the information we have. So we're looking at this most recent bar here, and you can see if I scan through all of these, I don't think there was any other ones. Other than on earnings plays. You can see volume spiked here on earnings for Apple. Apple would probably be a good play, expecting price to maybe pull back down and close this gap a little bit before continuing higher. But since I kind of indicated we want to avoid earnings, we're going to do that. Nothing there on Delta, nothing on Micron, nothing on Pfizer, nothing here for Cisco. Could have possibly something here for Intel, but it looks like most of the downward move has already happened, and again that was triggered by earnings here, and so I would probably stay hesitant about this. And plus we don't have 3 consecutive days or more of low average volume. Caterpillar again, high volume triggered by earnings. Nothing here in American Express. Disney, same. Disney actually has earnings coming up. Walmart, nothing there, although we did have a little bit of a jump in volume, so may be able to get a trade here. We just have to see what it looks like in the days ahead. Johnson & Johnson has the potential to be a trade setup. So let's kind of look at this one and see what we think. So just on this 3-month chart, let's go ahead and take a look at the 1-year chart. So we do have a little bit of a bearish, so I don't have my trend line tool, but we do have a little bit of a bearish trend here. So it could be a potential candidate. The only thing that kind of makes me hesitant is, we had all these, red candles and these red volume bars kind of, consecutively, and price stayed below average for all of them, including this large downward move here. And then, so you can see we've got these long tails on this particular candle, which makes me a little bit nervous that was the high volume day, because it may be kind of indicating, and this is a little more advanced, and it would probably take some experience for you to be able to draw this conclusion. But to me, it might be signaling that this is kind of the exhaustion move, and we may be looking for another move higher. So if it's me, I'm going to probably, avoid Johnson & Johnson, but just for the sake of this video, let me go ahead and kind of walk through. So basically what we're looking for in the next day or two is we're looking for price to, so we closed here. Let's just go ahead and draw us a couple of price levels. We closed here at 145 or so, give or take, and we had a high on the day. Well, the high on the day was here, but the open was here at 146.62, again, give or take a little bit. So we're looking for price to trade somewhere around 146.20. If you look over here to the right of my screen, somewhere right in the middle of those two price levels, we're looking for price to come back into that area, and then of course continue it to move down. So what I would do if I were going to trade this is I would first take a look at the IV rank, and you can see IV rank is down at 11.92%. So we'd want to be a net buyer if we were going to get bearish on this stock. And so we come over to our trade tab, and I always like to err on the side of caution. I know a lot of people are going to say anywhere from 30 to 45 days is ideal. I like to give myself a little bit more room to play. So if this did go down, we kind of want to identify where we think it would go to, realistically. I guess if you're just looking at past price, you could make an argument it would come all the way down to 137. But for the sake of conservatism and realism, let's kind of split the difference and say, okay, well, possibly price may come down to where you had this little congestion area here, somewhere around 142. And so we'll just say 140 would be good enough. Or if you wanted to, you could do 145. And let's say we wanted to sell a bearish debit spread, since we want to be buyers since IV rank is low. And then, that would cost us $131 to get into it. Well, possibly a little bit more. Since the market is closed right now, it's not giving us very accurate mid and natural or mid prices. In any case, so about 130, 140, 150, somewhere in there. And you'd want to be, to be honest with you, I would probably leave it around 131. That way, as price did come back up to the area you wanted it at, you would possibly get filled at that price with the hope for some downside to come. Again, just given the price action here, and given that price has kind of fallen down and we didn't have any higher volume bars, kind of makes me think this is an exhaustion move. Much like you see this bar here, you had these down days, you had all these below average volume bars, and then suddenly we had a spike prior to this run up. Again, that's just my opinion. There's no guarantee that will happen. And likely I would still be willing to put in a trade on this and just see if we could get some more downward movement. But Microsoft was the one I really wanted to look at, because I thought it was just a beautiful looking setup. And it's certainly a trade I'm going to be setting up tomorrow. But you can see on the on the 3-month chart here, we've got a nice strong bullish move. We can take a look at the 1-year chart, and you can see over the last, since looks like back in March when this thing bottomed out due to the coronavirus, we've had a nice strong bullish move, and we've got a nice kind of pullback into the moving average line here. And then of course, once I get back to my 3-month chart, you can see we do have several days of lower than average volume, and then we had this spike here. So what I'm hoping for tomorrow, or in the the next day or two, is I want price to come back somewhere around 202 here, maybe even a little bit higher, maybe around 203, 204, and hopefully price will just maybe create a tail at some point throughout the day and trade down lower before continuing higher. If I'm hoping for the setup that I think it would be, is I'm hoping price will trade down a little bit, maybe around 203, 204, like I said, and then continue its move higher over the course of the next 20 to 30 days or so. This isn't a get in, get out quickly type of strategy. It could take you anywhere from a week to a month or two to realize your profits. But if I was setting up a trade in here, again, I would probably, well, let's first take a look at our IV. We can see IV is relatively low, so we're gonna want to be net buyers. Let's see where we think it might go to. 216 is where it might run into some resistance. So just for the sake of conservatism and realism, let's say around 209, 210. So we think it'll probably go up to about 210. Let's go ahead and buy that vertical. I would set it up for a little better price than $2. We got a 5-point wide spread, so I'd probably try to set it up for around 180 or so. I think is in the realm of reason. And then if price does at any point trade downward tomorrow, the hope is that this would, well, it might be backwards in my thinking here. Yeah, so if price traded downward, this would likely this premium right here would start to decay a little bit, and we would be able to get filled at a little bit better price if it did trade down to around 203. Sometimes when you set up a trade here, let's go back to, yeah, sometimes if it's a live market, sometimes it'll give you the expected price, for, if I moved it all the way down to here. In fact, we can probably see, we can analyze this trade, and we can see that price would need to come down to around 203.70 for us to get filled, somewhere around there, for us to get filled at, let's go and put it back at 180 because that was my original assumption. We'd need price to come back down to about 202.71. That might be a little bit too aggressive. Maybe go to 190, and that'll get us down to about 204. So we could probably enter this trade about 190, and if it did trade back here, and then hope for a little bit of a move. And we can actually go ahead and look. Let's say it took us a few days. We got in at 190 and it went up to 210 is kind of where we identify. We'd make a quick $40 over the next few days. Of course, if it went above 211, 212 at expiration, you can see our max profit would be around 310 as long as it stayed above kind of 215 there at expiration. In any case, those are hopes and prayers, and so we're expecting this to go to 210. We don't know how quickly it might happen. If you really want to get, if you really want to be a little more conservative, you can trade in the money here a little bit, and take your money that way. But regardless, I would probably trade it right at the money, expecting this 210 to at some point bounce in the money, and do it that way. But you're free to set it up as you wish. Sorry, I got a little long-winded there towards the end, but that's kind of the basis of the strategy, and it's not foolproof. I can assure you it will fail, but it's just something I've been using here as of late, and it's been working for me. So feel free to check it out when you have time. Appreciate you watching. Take care.